everyone, and welcome to the premium video newsletter for Monday, September 9th, 2013. I hope you had a nice weekend and got a bit of rest. Last week was a very interesting week because we saw the market being pulled in two different directions. I think this week will become more eventful as the week develops. Starting with the fundamentals, the only report we had this morning from the Feds was the Consumer Credit Report. According to the Federal Reserve, Americans cut back on using their credit cards in July for the second straight month, while taking on more debt to buy cars and attend school. The Federal Reserve says consumers increased their borrowing by $10.4 billion in July from June to a record high of $2.85 trillion. That followed an $11.9 billion gain in June. To give you some perspective, most Americans are waiting for tomorrow when President Obama will discuss Syria live on national television. The broad market is discounting Syria completely today and finally moving above the 50-day moving average. The rally is broad and most sectors are on board today. The next point of resistance for the S&P is the 1680 level to the upside. I want to see if we can fill that gap that we made on the way down, which is slightly above the 1680 level. I think if we can overcome that level and we don't hear anything too negative in regards to Syria for the next few days, we may be able to trade completely above the 50-day moving average again, giving funds and investors more confidence in the broad U.S. stock market. Yesterday I showed you Friday's market internals, and today I'm showing them to you so you can compare them to today's internals. On Friday the internals were biased to the upside, but only a little bit, while today most activity across the entire stock market is moving upwards strongly. This is very unusual during the current economic climate. And this is why I'm thinking that the U.S. is either already discounting Syria in the price of stocks, or alternatively, the stock market doesn't believe that there will be a military strike. I will continue monitoring the internals because they provide a great overview of the sentiment of the broad market. However, today we have a new high in the NASDAQ sector, and this is how the internals look when the markets are moving strongly in one particular direction. Home builder stocks were some of the biggest gainers in the S&P 500 index after Hovnavian Enterprise, which is a very large home builder, said that home prices are rising and its backlogged jumped almost 27% from a year earlier. Home building stocks had a very volatile year. Investors have been bullish because the housing market is in fact recovering, but worried that rising interest rates make mortgages more expensive for home buyers. Technically, the sector is beginning to pick up, and I strongly believe this will be one of the biggest gainers as the economy continues to improve over the next several months. Watch for the next resistance level around the 31 to 3150 level. If most subsectors begin moving higher and crossing above the 50-day moving average, we should see some momentum out of this sector, so keep an eye on it for the next few months, especially if we continue breaking out to the upside in the broad market. For now, the next resistance level is 3150. Moving away from the stock market, yesterday I mentioned to you that gold and energies are important markets we need to watch because they're the most sensitive to the current Syria crisis. Today, crude oil is very quiet and range-bound for the most part. Till we hear something certain from Obama, and that won't happen till tomorrow, we will more likely than not stay range-bound. However, if we do get some clarity, I can assure you this will be the first market to move. To give you some estimates, if the fear of going to war subsides, crude oil will be moving rapidly towards the 104 area. And if we move forward and attack, the market will be moving above the 112 level. Right now, stay patient and try not to commit to any particular direction in this market. We have two levels that we need to watch, and I will update you as things continue to develop, which should be sooner than later. As per our analysis yesterday, the US dollar broke down today. We saw strong divergence between the RSI indicator and the dollar during yesterday's analysis, and we talked about the dollar softening up as well. We have that today, and one of the reasons why the dollar is weaker is the strength in the stock market is suggesting that the stimuli program won't be cut or will be cut very gradually. At least this is what the US stock market is telling us right now. And if that's the case, the US monetary policy will continue to see weakness due to the continued aid from the Feds. Also remember that if Feds continue to put money into the market, and that's what we're seeing from the stock market today, interest rates will continue to be weaker. So there will be less financial reasons for traders to take money out of foreign currencies and put them into the dollar. Technically, watch for the 81 area. It seems like we're headed in that direction, especially if we continue to see strength from the stock market in the next day or two. One foreign currency we haven't discussed in a while is the British pound. Believe it or not, the pound was one of the heaviest volume currencies in the early 80s and still remains one of the best trending markets of all time. Right now we have a long-term bullish triangle formation. We had 3 resistance areas bounce off, and each time we dropped less and less. Looking at the weekly chart, we can see how we're approaching either potentially overbought levels on one hand, and on the other hand, break out to the next level, which is fairly far away at the 162.5 area. Here's the problem with the pound. If nothing pans out with Syria and US investors are already pricing Syria into the price of US stocks, which is very possible considering it happened during the first Iraq war, the US dollar may have very limited decline. And if that's the case, our upside on the rise at this time on the pound may be limited as well. My view is we know the US government is slowly going to stop putting money into the bond market, and this has potential to strengthen the dollar tremendously. If that happens, we won't be seeing much higher prices in the pound. So right now we have to watch the 157.5 level carefully and monitor the US dollar as well. Till we get clarity in regards to Syria, I think the pound will continue staying strong. But Obama is speaking in about 24 hours, so keep your positions light for now if you're going long, and watch the resistance levels carefully. We're not overbought in the pound on a technical level, but it's hard to gauge the strength at this time due to the external news having a stronger than usual influence on this market at this time. The first setup we have for today is a tail gap to the downside. The ticker symbol is EXPE, and the name of the company is Expedia. They provide online travel services. Sell 10 cents below today's low on a stop, and if filled, buy on a stop 20 cents above today's high. You want to give yourself a bit of room because the range today was very tight. The second setup we have is a 4x4 to the downside on ticker SIX, which is an interestingly enough amusement park located in California, about 20 miles north of where I live. There was an incident where a woman flew off the roller coaster this past summer, and I believe there's a lawsuit pending. Anyway, it was all over the news in this part of the country for a few weeks in the beginning of the summer months. The setup is also a sell, and you would place a sell stop 10 cents below today's low, and if filled, place a protective buy stop 15 cents above the high. I'm anticipating a higher opening tomorrow on the broad market and the NASDAQ market, and I will update you with a midday update as usual. Have a great night, everyone.